Okay, I'm going to do a little video here for you. Do a couple markets. I'll be using my price time cycle tool and my vibration box tool just to give you a sample of how you could use these tools. And let's do a little analysis of the market. Price time cycles tool, you'll find it for free out there in the TradingView indicators. And I'm going to apply this to our 2018 low. And as you can see, the 49 bar cycle is obviously shown by default, and it's always a good one to take a look at. I like to mention that in every video I make about this tool. And then I'm going to set the auto cycle up, and I'm going to set the manual cycle to 0 just to prove that it's not in any way being part of this now. And then I'm going to apply a time ratio of 0.01. This is taking our price down here of 31.24 and converting it into a bar count of 31. So this is a weekly chart, and we've got 31 weeks being counted out, and those are pretty ideal turn dates as well to have. Now we're going to take the price levels and turn them on, and we'll add a couple more price levels. Maybe I'll add 20 of them, and then I'm going to enable a second cycle, and I'm going to set it to 7 because this is Bitcoin, and I'm going to use make sure that I have enough of the secondary cycle. It's just the thicker lines that you see here. And what I end up with is boxes here of 7 by 7. Okay, and those are boxes of course, 31 bars and $3,124. Okay, so basically the vertical and the horizontal are equal, and therefore we have a 1 by 1 setup. So I'm going to set here a 1 by 1 to this point in future there. And what we have here is a cycle based on a 1 by 1 geometry to this price here, or 1-to-1 geometry. You're sort of taking our time ratio and dividing it by 100, and then also just keeping the price ratio as it is. Now, of course, the market moved above the 1 by 1, so we could have checked out what the price levels looked like if we multiplied by the amount that the market has broken above. So if this is broken above a 2 by 1, then we'd want to see a price ratio of 2 and take a look at what the price levels were like up here. Once we were up here, these price levels would have been more relevant to us. And once we broke above the 3 by 1 or the 4 by 1, you might even want to take a look at those. Okay. But right now, we're down here right at the 1 by 1. And being above this 1 by 1 is a bullish scenario, I suppose. Unfortunately, the market has shown a lot of weakness here, and we don't have a weekly close above this 1 by 1 just yet. So dropping below this would just prove another bearish scenario, and this 2 by 1 down here, or the 1 by 2 as I would call it. I'm not sure always why TradingView has a 2 by 1, but I would call it a 1 by 2. Okay. So this market is weak until it's above this 1 by 1 with weekly closes. Okay. And then what we could do is we could take a look at the vibration box on top of this and see what it looked like over the course of the year. Remember that this is all projected from the low here. There's nothing that I needed in order to build this chart other than this very price and time. So if I take my vibration box, another free script that you'll find, I'll leave some links. Here we go. So the vibration box basically just works as a separation of dates. The other tool is working on bars, so I can't put them together, but just placing them on top of each other works just as well. So I'm going to set it to the 1 by 1, but we'll take a look at some different ways to take a look at the vibration. Now, unfortunately, with TradingView, when I enable this setting within my scripts to be able to move the box around in this manner and choose coordinates with the mouse, I cannot place coordinates in the future. It's just a limitation on this kind of scripting. Unless somebody has some sort of information on that, I would appreciate the help. But always you can just enter the date manually and any information, any of the coordinates manually. It's all in here. So basically what you would do is just set it to the price that you'd like in the future, and that'll be a perfect price. You can do that more perfectly if you'd like, but in this case I'll just do it quickly like that. And then I've got a date of February 13th, 2023. So I'll set it up here to 2023 02 13. Did I get it? Um, okay. Oh, it's a weekly chart, so it's just placing it on the next available bar. We could go back a couple dates to get it exactly on that last bar if we'd like. There we go. So it's right on that February 13th date on the weekly chart. Now I can enable our vibration. The vibration is by default set to 0, and therefore it starts at 0 and it runs through the circle geometry, and you kind of get a default cycle for any market there. It's good to take a look at sometimes because it's going to fit the market well. If I were to take this and copy it, Control C on this, if I just click on that, uh, that the name of the script there, and I hit Control C and then Control V, it copies it for me perfectly. I'm going to take this price up here where the 3x1 meets the price time cycle, or the time cycle. And I've got here a price of about 68,890. So I'm going to set the high at 68,890. It's going to be way up there. And now you can see how when the market broke out, the price time cycle, including the vibration from 0, gave us a pretty good indication of some form of up-down motion. Now, of course, down here, we would have been using those lower boxes, up, down, get a big movement down there, up. And now the market's broken above us, so we need to take a look at the higher level vibration. It's the same exact vibration, just from 0. And you could see that, once we got this move up and broke above all these different angles, we could see the higher ratio vibration. And then we've got, some great square outs, as we call it here. The other thing to look for is harmonic prices. So when these points hit these points on the box, you've got different places for the price to be. So those are related points here. That point there is one box from the high, and or from the high at the top of the box, and this point is one box from the low. So you've got a harmonic price there, and then price corrects. And so essentially what you've got is the reverse going on. So you can take a look at the mirror vibration. You can see how this worked well for the mirror. Now, this is from 0. This is a static vibration from 0. All markets work with this static vibration. You have to have the right number of the vibration, and that comes from the name or whatever else you could derive it from. So if I were to take this back and mirror the vibration, unmirror the vibration, and I'm going to set this to 283 degrees. 283 degrees is the price, or the degree of natal Bitcoin sun. Of the date of the Genesis block is the degree of the sun. And so you've got here a pretty good vibration that's more in tune without mirroring it, right? So of course down here we'd be using a smaller ratio box, one that was set to say the 1x1 or the 1x2. But let's take a look at that 1x1 box and set that other vibration up. I'm going to change the color of my outer box so it looks a little more clear with the vibration. I could also make it a solid line so that you can see a little more clearly, thick. And then I'm going to set this to 283 as well. Okay. So a little bit more accurate with the price levels, a little bit more interesting turn time, relatable to what's going on in the market without flipping to the mirror. But we could also take a look at the mirror and we might get some other kind of connection. Okay. So the box is really flexible. It could also be multiplied out. You could duplicate it upwards, up and right. Basically, you make 6 boxes for yourself. And technically, if you were to set it instead at the prices that we've got it set to here, because I'm plotting below 0 there, I could just take this and set it to 46.9 at the high. And the middle here, I'm going to set it to 25, 25.10. There you go. So it's a different look at it. It's a more octave look. You're seeing the vibration work in a different way here. At these higher levels, you might get more detail. It might not give you that big, broad stroke, which really covers the price action well. Take a look at that with the thicker, more visible line. Right? The two working together is really what's going on. The different ratios are playing out at the different angles, but when the market's moving slowly here and here, when it's not really taking off on this weekly speed that we see it working at the highs and now at the lows, basically you've got different ratios working even when you're up here at the highs. These different ratio boxes will be important. And instead of just using a standard Gann box, which would cover all of the geometry shown, it kind of gives you a different look. It gives you a different kind of perspective on the angles and the different kinds of divisions of the box. Okay, we'll take another look here with the different market. Use the mini here, and I'm going to zoom in on the top here, and we're going to start projecting downwards instead. Do something a little bit different than the last one. We'll take our price time cycle tool, place it at the high, and I'm going to set this up without the 49 bar cycle. I'm going to 0 for the 49 bar cycle, and I'm going to set it the auto cycle. And so now we're getting an auto cycle of 4,800 or so bars and $4,800 in price. It's all too big for our market. Take a look at what it looks like on the price levels at 0.1. We should get $480 cycles, and that's pretty good for us, I think, within this range here. And what I'm going to do is I'm going to send those levels downwards. Okay, I don't have to send them upwards because we're projecting from a high, though if the market broke above, I might want to see those as well. And let's increase the amount of levels and increase the amount of cycles to 6. This is the S&P 500, and I want to make sure that I have enough of the, oh yeah, we've got enough lines. Now, I don't have a time cycle that works for me yet. It's too far in the future. Okay, we want to break down this section here to the same kind of look that we had before, where we project a certain amount of time into the future that's relevant to us for our trading. And so we'll take our our time ratio, and we're going to knock that back to 0.1 and see what that looks like. Might be too tight. No, it's just right. Perfect. So we've got 48 bar cycles, and we've got $480 cycles downwards and upwards technically, but not showing right now. So I'm going to take my fan just like I did before, set it to the high, and place it down there, so I know that it's basically a perfect 1 by 1 down to the low, and we've got a perfect different divisions of that box or those speeds in the market marked so that we can change our price time cycle when the market breaks above or below angles. And right now we're above the 1 by 1. So let's take a look at the 1 by 2 for our price ratio, 0.5. It's the 1 by 2. And we've got here this cross in the future and this level here, and these horizontal levels are a little more relevant to our trading, probably a little closer to a tighter trading plan and a tighter time frame for ourselves. And so now that I've got this basic setup that we had from before, I'm going to add my vibration box, set it to the high, and I'm going to set it to this price here, but you know that it's not going to be setting it in time. Okay, we got to manually enter that date, and that date is the 28th of February, 2023. So take this vibe box, 23/02/28. Okay. Oh, they placed it. It's there's probably a weekend there, or something about the time of day. It's placing it on the next bar. Might want to put it to the day before. It's going to set it. Let's nudge it over. TradingView is a little weird with dates versus bars. You got to figure out which date works for the bar that you're working for. it's just about nudging, no big deal. And so you've got this pretty good setup here. It's divided by 6 instead of 7 this time, and we get a little cleaner setup for ourselves. The S&P 500 works on a vibration of 6. Some other people might have other vibration numbers for the S&P 500, and that's just fine. You could use those too. And I'm going to offset this here to 57 degrees. That's our May date natal position for the S&P 500, the Buttonwood Agreement. And so take this vibration, turn it on, and you can see that the vibration starts just below, one section below, and we've got a good sort of channel here that the price has moved down. What I'm going to do is I'm going to change those colors again just to knock back the boxes and bring out that vibration line. Oops. Dashed works too. And the other thing that we didn't do with the other chart is we could always offset in time with our vibration as well. So I'm going to take this entire vibration, measure the amount of time in days, in calendar days, how long it takes to get to this first division of the box. Now you can see it's a little bit funny. It's not exact with the price time box, because the price time box, again, is set to bars, and the other divisions that are set to the vibe box, these divisions are set to actual calendar times and days. Okay, so they kind of slightly differ along the way. We've got 69 days, okay, 47 bars, and that's basically our 57 degrees of this entire time cycle being 360 degrees. So I'm going to take this and place, what was that number? 69 days. So I'm going to take my vibe box, copy paste, and I'm going to set it to offset 69 days. Okay, you've got different settings for the different time frames you might use there. You can get a really exact calendar date time, and it'll place that vibration offset into the future. And let's just take a look at that. Take a look at it without the other information, without the fans. Hide it. Okay. I think that you can see the power of these channels that the vibe box makes. It's a very simplistic idea, but sort of exactly what's going on with the circle geometry. I hope it helps you figure out, what's really going on with these circles that, Gann was using, and all these different kinds of squares, and how you might find a path of price rather than just using a standard Gann box, which gives you a lot of information on its own, just like the Gann fan does. If I took a standard Gann box and just added all the angles, you'd see them all. It would work. You can just apply the defaults and get rid of those colors. Okay, and just trying to show the angles here. There we go. So the angles, a mess of angles, which yes, all kind of give you a good idea of support and resistance, and all kinds of different angular, price action that you could use as a directional help. Center of the box always important. That 50% by 50%. So just laying a Gann box down inside of your price time cycle is a powerful tool in its own, but this gives you the path within it. It's the idea that, price is moving along its singular path that is, basically identified by its own characteristics. Okay. And let's just make that a little thicker there so you can still see it inside the box. And I would always take a look at standard geometry, and I'd always take a look at the circular geometry. They're both playing out. They're both important for our trading. If you're trading closer, you want more detail, you add the big box. If you don't, if you need less detail and you're trading bigger swings, maybe it's better to just see these bigger swings. Okay. Hope this helps you use this box. I'm going to be setting up a blog that does this kind of analysis on a regular basis and gives you a much deeper understanding of these boxes and how to use them. And it'll be a subscription, but should be rather inexpensive, and then we're going to be using all the free tools, and then I'll open up another tier for people that want to use my more advanced tools. I've got a bunch of different scripts to share, about 9 private scripts, and There's always more to add to these charts to give us more information, but just like this, I'm sure that you could see the power of just using these tools with your own technical indicator, maybe an RSI, maybe a, maybe an AVWAP, which is my favorite, right? Wait for these levels to break, wait for these levels to clear out for your directional bias to set in on the market. And if it does agree with your bias, then you can trade. And if it doesn't, well, you could just get out. Okay. Hope this helps.